Friends, now let us see what are the different types of items under OCI. Okay, if you see the items that are included as other comprehensive income, you can classify those items into two categories. One is OCI NR and OCI R. OCI NR stands for other comprehensive items not reclassified to P&L. Not reclassified into profit or loss. Okay, whereas OCI R stands for reclassifiable, NR stands for not reclassifiable. So here OCI R means reclassifiable to profit or loss. Okay, now what is this OCI NR and OCI R? For that you have to understand what is going to be the accounting treatment of another comprehensive income. Suppose, please listen very carefully. Suppose there is a company A Limited. Okay, and this A Limited has generated an expense. Let's take as an expense which cannot be recognized in profit or loss account, rather it has to be recognized OCI. So there is an expense which is classified as an OCI item. Okay, so in the year in which OCI has been recognized, what will be the entry? You will be passing an entry called as, it is an expense. So OCI expense, you'll have to mention the nature of expense, right? Nature of expense could be actuarial losses, okay, that's an expense, or any other item. So let's say you have debited the expense account and then you are crediting to the balance sheet, the liability account. Since it is an expense, naturally the other side will be to a liability account. So we are recognizing it as gratuity provision under OCI. Okay, let's say the amount is 100,000 or 1 lakh. Okay, 1 lakh. Now there is a liability which we have recognized in profit in the balance sheet. This will go to balance sheet and this will go where? This will go to OCI in statement of profit or loss account. Okay, so statement of profit or loss account, it has go to SOPL. Now the same thing, suppose it is an income. Okay, income OCI. Let's say what will be the entry? The entry will be, let's take it as gratuity provision OCI debit. You should not get surprised why I am debiting gratuity provision. Gratuity provision as such can have various components. Okay, and one of the components in gratuity provision as per your index is actuarial gains. If it is an actuarial gain, the gain account will have a credit balance and the corresponding asset will have to be created as a gratuity provision. Okay, this is only one component of gratuity provision. When you consolidate all of the components of gratuity provision, it will, end of the day, it will come to a net liability. But one component can have a asset balance or debit balance. Okay, so here gratuity provision, let us say I am putting in as 2 lakh. Okay, then 2 income. So OCI income. OCI income is 2 lakh. Okay, so these are two things which I have recognized in the first year. Obviously, this will go to the balance sheet and this will go to the statement of profit or loss account as OCI. Okay, so this is origination of OCI. Now, see, suppose few years later, this particular balance sheet item, what is the balance sheet item? This gratuity provision as well as this gratuity provision, these two things have gone to balance sheet. Now this is a liability recognized in balance sheet and this is an asset recognized in balance sheet. This is a liability, this is an asset. This asset or liability will have to de-recognized. Am I right? This liability or asset, okay, liability amount was 100,000. So this is having credit balance and this asset was having a debit balance of 200,000. Okay, these two things are outstanding in your balance sheet. Now these things have to be de-recognized, whether it is an asset or liability. Any asset or liability cannot be there in your balance sheet forever. At some point of time, maybe after 2 years, 3 years, 5 years, 10 years, whatever be the case, okay, it will get de-recognized from the balance sheet. When you de-recognize this liability or asset, what will you do? This have to be either routed to the profit or loss. Okay, de-recognition of an asset or liability will ideally will go to the profit or loss. So if the de-recognition of the OCI results in that item going to the profit or loss, or the de-recognition of the OCI from the balance sheet results in recognition in profit or loss, recognized in profit or loss, such OCI items are known as OCI reclassifiable. I hope that is clear to you. Okay, I am talking about the year in which the OCI item is getting de-recognized from your balance sheet. Whether it is an asset or liability, the year in which it gets de-recognized, if that item should go to the profit or loss, which means our normal profit or loss for the period. Okay, anyway, when you created this OCI, you have not routed it through profit or loss for the year. Rather, you showed it as separately. But in the year in which you de-recognize it, that asset or liability, if you are required to route it through profit or loss, or if you are required to recognize it in profit or loss, then such items are known as OCI R or OCI, which are reclassifiable to P&L, reclassifiable to profit or loss. Whereas there are certain items, okay, there are certain OCI items which on de-recognition from the balance sheet will not be routed through profit or loss, rather it will directly go to the reserves. Instead of taking it to routing through profit or loss, you are directly taking it to the reserves. If that is the case, or if those items are what is known as OCI not reclassifiable into profit or loss. Friends, this is a very common item which most of you have a confusion when you come to the Ind AS or Ind AS statement of profit or loss account. Okay, OCI items can be classified into two categories, that is OCI non-reclassifiable, OCI NR, and OCI reclassifiable, that is OCI R. Okay, this is NR, this is R. OCI R means these are OCI items which upon de-recognition from the balance sheet should be reclassified to profit or loss itself. Okay, when you created, you did not route it through profit or loss, but when you de-recognize the item, you have to route it through profit or loss. Such items which need to be mandatorily routed through the profit or loss are known as OCI R. Whereas those items which cannot be or which shall not be routed through the profit or loss, rather you should directly take it to the reserves, adjust against the reserves, such items are known as OCI NR or non-reclassifiable. So just think of its name, reclassified, not reclassified to P&L, that is OCI NR, reclassified to P&L, that is OCI R. Okay, so depending upon the treatment at the time of de-recognition of OCI from the balance sheet, de-recognition of OCI, okay, from where? Balance sheet. Okay, that is the time when you have to see whether it is NR or R. But this classification have to be done at the time of recognition itself, because you know what is the nature of item. Knowing the nature of item, or by knowing the nature of item, you can say whether it is an NR item or a OCI R item. Friends, I hope that is clear to you. Thank you.